Welcome back. Good to have you with us. Let me turn to you and ask you something that may be a little bit out of left field. I'm going to get to the business question in just a moment. Have you started raising your rates on deposits?
We've had to, unfortunately. I think there's been a significant outflow of deposits in the banking sector, and there's still been strong demand in the banking environment as well. And as a result, to make sure that we have enough funding sources, we have had to begin to raise rates, although still at a lagging pace to where the market's gone and what we're able to charge on the asset side.
So let's talk a little bit. That's an interesting answer. Let's talk a little bit about what you're seeing from business borrowers. Are they pulling back? How are they reacting if they have new loans, loans that they need to roll over? How are they reacting to the idea that they're going to have to pay more for their money?
No one's happy about it. So
Yeah.
our bankers have had to have a lot of difficult conversations with many of our borrowers. Many projects that were assessed were done in different economic times. Debt service coverage ratios look very different today than what they did even 6 to 7 months ago. I think what we're seeing is a lot of uncertainty across the entire space, whether it's with interest rates, from a global perspective, what's happening in Ukraine, from a supply chain perspective still. And as a result, uncertainty leads to a lack of commitment when it comes to CapEx. And we're seeing that today.
The Fed fund projections rate estimates a 4% rate by the end of this year. For small businesses, Ira, could we reach a level or a point at which these small business owners are not able to cover the cost to service their debt?
I think if you look at one side of the ledger, expenses have upward mobility as long as revenues go up. They still continue to see the ability based on inflation to pass along many of these expenses. Until that really begins to change, the interest rate environment is still okay for some of these small businesses.
Credit card debt has risen. That was the message from American Express last week. They also said, as you pointed out, spending is also up. So what level does it need to reach before this becomes a bigger concern for markets, credit card debt?
Yeah, I think looking at one side of the balance sheet in isolation is really going to confuse a lot of people as to how they think about the projections of the economy. When I think about what's going on in the interest rate environment today, we have 100,000 economists and 200,000 opinions as to what's going to happen. Each of those opinions are really based off of what indicators you're looking at from an economic perspective. If you're looking at corporate profits and unemployment, one could argue that the Fed still needs to be more aggressive in raising rates. If you're looking at housing, there's an absolute slowdown, and one could argue that the Fed has been overly aggressive and needs to slow down what their policy looks like. To me, there's a couple underlying factors that really have driven inflation over the last few years. One is the massive fiscal stimulus that our government has put out there, the accommodative monetary policy, the uncertainty with regard to Ukraine supply chain. And there's a third one with regard to the environment and climate. And until we have a better understanding about what the impact is on those variables that have really driven inflation, it's hard to really say whether the Fed's overdone it or not.
Let me ask you, because you just said something a moment ago that was very interesting. You said that businesses are having to look or take a second look at the financing of projects, and that you're seeing some capital expenditure outlays going down. What does that tell you about what's going to happen or is happening in the broader economy? Are you seeing a slowing economy?
Without question. I mean, I think I'd have to have my head in the sand to sit there and say we're not going to go through a recession. Things are definitely beginning to slow. I think the challenging point goes back to looking at the unemployment number. Wage inflation is still significant, and corporate profits are still very, very strong today. But we have to keep in mind that those are lagging indicators. And as a result of those being lagging indicators, things can still seem really good for a lot of people. But from a long-term perspective, it's insane to think that the government could put that much money out there from a supply side perspective and not have inflation and what that implications are going to look like.